Yeah, hello and welcome to another update video about FET. It's become quite boring, this chart. We haven't really seen any progress for a while, but really the overall situation on this chart hasn't changed. So we're still in a situation in which we expect further upside continuation. The question that will probably be resolved soon is whether the fifth wave here extends a little bit further. Okay, so the idea is that, yep, off this August low, the market could have formed a wave 1, a wave 2, a wave 3, a wave 4, and the wave 5 could still be unfolding, and we might see an extended 1, 2, 3, 4, 5. Whenever we deal with a question like that, if we get an extension in the fifth wave, or if the fifth is already in, because that's possible, we can typically use the 78.6 retrace level as main support. So when the question is, okay, we have a wave 4 low here on the 10th of December, it's of course possible that we get an extension higher here in this fifth wave, that this subdivides into another 5-wave pattern. But below the 78.6 retracement, this is likely failing, and the level is 51.8 cents. So that's the main support level we can use. For now, the support box is holding and generated several, let's say, positive responses. However, the market can also not break through the identified resistance level. Remember, in the last video, I explained to you that we've got this, in the last videos, that we've got this next target there and breakout point at 75 cents. So the 75 cent level was actually a target for this move to the upside. It was reached. But basically, for a month now, the market has been consolidating just below that level. It has so far failed to break through, but it's consolidating in a corrective fashion just below that level. That could really indicate continuation higher, but we need to see that break higher. We need to see the break above that level. And again, it's the sort of, yeah, let's say 76, 70 cent level if we call these previous swing highs relevant as well. And a sustained break above that level could send it higher in wave 3 of 5. Now, in a short term, more bearish, but still bullish scenario, the circle wave 2 support area becomes relevant. So let's say the price breaks below 51.8 cents and does not continue to move higher. Then it's already the case that this fifth wave is most likely complete. Okay, so the fifth wave would sit here, and we would assume that all of wave 1 is already finished and that we are in all of wave 2 in this pullback support structure. Okay, so that basically a larger corrective pattern is going to unfold. Now there's no certainty about this one. You know, it's unclear if this is the more directly bullish one or if we get a more deeper pullback before we continue to move higher. Whenever we have two bullish scenarios, I would just use the entire support area basically to measure my risk. First of all, to mentally prepare for a potential pullback down to the yellow box. But also, obviously, the orange box could be traded. You know, it's up to you how you deal with that. There are different ways how this can be traded. For example, you could just say, okay, I'm just getting a small position. If the price goes lower, I'm just going to add. At some point, I want to stop out because below 22.9 cents, the bullish thesis is probably not going to work out. So measuring position size against the 22.9 cent level is, I think, crucial until we have a confirmed low in place somewhere. Now, what you can always do is go long with a stop below the last swing low, but that's up to you. Until we have a breakout, that's obviously, we don't have a confirmed low in place, really. But that's why we've got the support zone. You know, you could also just trade against this support zone, but again, that's up to you. What I can tell you, though, is we have a potentially impulsive looking move up and currently clearly corrective price action. And as long as the 51.8 cent level is holding, it is expected that the price is breaking higher above the 76 cent level. And the next target would be $1.02. Then we've got the $1, let's see, that's the next fib level, $1.14 level. And we also have the $1.66 level next as next basic target there on the chart. Okay, so these are the next levels to watch. They haven't changed in over a month, and the price has just been consolidating without making real progress. But it's an overall potentially bullish chart, just needs to hold support, and then we can look at that target area next. And if the price manages to continue to push higher, at some point we might see the $8 plus range. But that's sort of what we can say at the moment. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.